Hello everybody, we should be live now. Please use the chat section on the right side of the video to let me know if you receive audio and video. And keep in mind that there is a delay of approximately 30 seconds to 1 minute between me broadcasting and you receiving the broadcast. Hello Chris. Before I begin, I would like first of all to thank Chris for helping me with the organization of this event and having the idea about this event in the first place. Okay. So, as I said, there is a delay of approximately 30 seconds, and that makes it a little difficult for me to follow the chat and answer the questions, but I will do my best to answer all of them. And since we're ready to continue, I will start with a typical question to you. So write on the chat, where are you from? Okay, so I'm showing you on the screen the website of Snell Trading, and before I begin, I would like to show you how to get to our risk disclaimer. You go from pages and then legal risk disclaimer. You should read the disclaimer and make sure you understand it. This is something that you have to know, that I am not an investment advisor or a registered broker or anything, just a trader, and everything that is included in the website and in this broadcast is just my personal opinion, and it is given for educational purposes only and nothing more. So we will start with technical analysis. I'm moving to the MetaTrader platform, and I'm gonna show you some basic stuff on technical analysis and how I prefer to analyze the markets, and then I will move to the website and I will let you know how to use it for your own benefit. So we're gonna start with an empty chart, and I have opened here the chart of the euro against the United States dollar. I'm gonna open the weekly chart, and again, due to limitations of our let's say internet connection, there is the video is only 480p, and I will have to zoom in and zoom out for you to see the longer picture, but I hope that will be okay. When we're talking about currencies, usually on the weekly chart you will see overlapping price action and not big trends, because there is a lot of price data, and it is normal over several years trends to change and create overlapping action. However, we can see here, for example, for the euro, that since the beginning of in the mid 2014, a big downtrend has started. As we move lower to the daily chart, we can see better this downtrend. We're now going to start with the single most important concept in technical analysis, which is the trend. we can identify the trend only by looking to the chart. When you see such a price, such a move, you understand that the trend is down. We are using trend lines in order to identify the state of the trend. As you can see, the trend was definitely down for some time, and after reaching the trend lines it accelerated to the downside, and it reached the point at which it started to move typically sideways. Just give me a second. Yes. It started to move sideways until it broke the trend line, which is an indication that the preceding trend, this downtrend, is at least exhausted, if not finished. Usually, when prices touch the trend line provides either support, or which after it is broken, like it happened here, trend accelerates to the other direction and then returns to test the trend line from above or below, depending on which way it has broken it. The same thing happened here in the euro. You see how here it has tested the trend line here, and then it broke, and then it reversed several times here, testing this trend line until we had the ECB interest rate event here, and jumped directly to the upside after testing the trend line from above. There is no magic with trends. You can identify the trend just by looking at the price data and using simple tools like a trend line to identify the state of the trend. Another tool that is very useful to identify the state of the trend are the moving averages. We can open the navigator window here, and under the indicators and trends there are moving averages. In this window we set the parameters for the moving average, and here is the period. We use 21 period, and there is again no correct and incorrect value for the period. We just use 21 because it is a Fibonacci number. Then we use the MA method as simple, not exponential and other stuff, and we apply to the close price and we click OK. Since the periods that we're using are it is a small amount of periods, the moving average is very near to the actual price, but again we see how prices are reacting to that level, and for example touch the average, and then moving away from here from it with regards to the general direction of the trend. We add another moving average, the 55, the next Fibonacci number, and another color here. I'm gonna choose blue one. And since the number of the periods is higher, the slope of this moving average is a lot smoother, and we see that we have a lot less touches with this moving average. Happen here, and here we have a break above. The same with moving average as with trend lines. When prices cross above the averages, it is an indication that the trend is at least exhausted. The other tool that we use when we analyze the charts, we need a momentum indicator. I prefer to use the relative strength index, the RSI, and keep the parameters as the default 14 period. The RSI is a momentum indicator, and you can use other momentum indicators if you like them, but you have to know what the indicator actually does. For example, the RSI is an oscillator, which means that it's moving between 0 and 100, and it's calculated by taking the 14 last candles and calculating the summary of the total gains of that 14 periods, and divide them by the total losses for this 14 periods. This creates an indication of the relative strength of the price action at the current point. We also add a moving average on the oscillator window. You can see the mouse, I see now. I don't know why this is happening. Just give me a second to this is my first live event, so excuse me for such technical issues. I'm not used to the software I'm using, so there may be such issues. So okay, okay. Okay, please let me know if you can see the mouse cursor now. Okay, so I'm gonna show you how you can add moving average on the oscillator window. You can just take the moving average from here and drag it over the window, the oscillator section. I like to use a 9-period moving average on the oscillator, and here the applied to should be previous indicator data. Okay, so I'm gonna close now the navigator. Okay, cool. So when moving averages are crossing, this is let's say a confirmation of a short-term trend change, and we use the same technique for the oscillator. A cross between the moving average of the oscillator with the oscillator data indicates that we have probably a change in the momentum. We're gonna now move to the concept of support and resistance. There are two kinds of support and resistance. The one is the static support and resistance levels, and those are levels like this one here, and for example this one here. Those are levels where prices have reached that level and reacted in the past. They are not standard prices, they are prices that just it happened in the past prices to react at those levels. As you can see here, prices moved to that level, and then they reacted. This level provided support. This level here then was resistance. After breaking below that, this level became resistance, and this follows for every of those levels that I indicate with these horizontal lines. we can use the break of those support and resistance levels together with our momentum indicator to identify short-term changes in the price movement. As we can see here on the euro, this is another important support level, and we have a resistance level approximately here. These are again, these are not standard levels. We don't take that as an absolute number, but just we look at price action and we set those levels as an orientation to where prices should move. If we move now into smaller time frames, let's go to the 4-hour chart. We can see how prices really reacted to those levels, and we have dynamic support that is provided by that trend line that started about a year and a half ago, and it provided support here until the ECB event, and we see how this dynamic support coincided with the static support of the 1.05 area. And during the ECB event, prices bounced above it, breaking above that other support level. And usually when prices are breaking above support level, they return to test this resistance level, and they return to test the resistance level as a support, and that's what happened here. And prices continued to the upside until they reached this resistance level here, and since then they were fluctuating between these two support and resistance levels. During the NFP release, we had a false break below the support level, but prices returned immediately above them and above this level, and came back to test it and continue to the upside. We have a clear indication here that there is probably a reversal in the momentum of the price action in the euro dollar. Prices have tested this level from above and continued to the upside. Furthermore, the SMAs are all below the price, the current price of the instrument, and thus the probabilities are that prices will continue to the upside from here. We have this resistance level here to consider, and also we can draw a trend line here and see how it for now it provides also resistance. So these are these are simple technical tools that everybody can use to analyze the markets. We will move now to into some more advanced topics, which is Elliott wave. I'm not gonna get into much detail because I don't know your experience with Elliott wave, and I don't know how many of you will actually understand what I'm talking about, and I will probably consider creating another event which will be especially for Elliott wave in the future. But for now, I'm gonna give you some simple tips on how to actually use Elliott wave and in practice, because I suppose most of you have read several books and web pages on the internet to gain an idea about the theory and the impulsive and corrective waves, but how you actually start drawing waves on a chart is a different story. I believe that the easiest way to start identify waves is by finding large waves on the price chart. For example, this candle here. Wherever you see sharp moves like that and long moves, they are probably a third wave. So you can use this wave to identify the first wave after before that and a fourth wave after that. And that is the case probably here. I will move into a smaller time frame, let's say the 30 minute, and here the move here is very sharp, and I will zoom here to see, and we can see here, for example, how we have how we can recognize 5 waves to the upside. This is 1, 2, 3, 4, and 5. This is the best place to start counting the waves. After you identify, excuse me, I'm gonna move back to a higher time frame. After you have identified a 5 wave move to the upside, you can see it where it appears in the larger trend. Here we have a downtrend, and this is a reaction. So 5 waves to the upside are probably a wave A, part of a correction of an ABC correction. So after that, we're looking for a move lower in 3 waves, and this is typically what happened here. So probably this is wave A, this is wave B, and we are looking for another 5 waves to the upside to complete an ABC correction. And what we look here is a special type of a wave, an ending diagonal. So there is a possibility that what we have here, it is a complete ABC pattern, and then we expect a continuation of the downtrend from here. But since prices continue into overlapping waves here, we cannot identify here a 5 wave move to the downside. We're looking for alternatives. One alternative is that this is a leading diagonal, that it is still under formation. We have an ABC for wave 1, ABC for wave 2, ABC for wave 3, and probably this is an ABC here for wave 4, and another ABC here for wave 1 to the downside, and a continuation of the downtrend. The other possibility, however, is that this is still part of wave A here, and this whole move is an ABC B, and thus we're expecting another 5 wave move to the upside from here. If that's the case, we use the Fibonacci expansion tool from here to find where the wave A will be equal to wave where wave C, excuse me, will be equal to wave A, and it points out this level here at around 112.50. Moving into a higher time frame again, we see that this level here is also a level that was providing support in the past and resistance. So this scenario is very probable. If prices actually break above this trend line, the possibilities are that they will continue until this level to form an ABC correction to the upside. And also, as we can see here, the momentum is nearing the 70 threshold of the RSI, which suggests that the momentum, at least for the 4-hour chart, is bullish, and it is nearing overbought over both levels. When you're looking into the momentum indicator, you should always look to the momentum to be the same in more than one time frames. In the 4-hour chart here, we see the momentum indicator is clearly bullish. If we open the daily chart here, we can see that the momentum indicator is just above the neutrality area, and it is below a declining trend line that may provide resistance for it to move well above the neutrality area. So it is not clear for now if the momentum on the daily chart has turned bullish. And until then, and since we are after such a big downtrend, we consider the momentum on the daily chart to remain as bearish. Therefore, it would be better just to observe where prices are going rather than entering the market long. It is quite risky to enter long here. It is a probable trade, but a risky trade, since the momentum of the higher time frame does not coincide with the momentum in the lower time frame. Okay. So I'm gonna clear the chart. Like that. And so this reaction here on the euro dollar is a very important reaction, because it may signal that this downtrend that began about 1.5 years ago has actually finished. It is a big reaction during an important central bank event that happened to coincide with a technical level, a level that is this trend line providing support to prices for some time, and then reacting and breaking some of the resistance levels. So we start to consider another scenario, since there is clear divergence between prices and the momentum indicator on the daily chart. There is another scenario that this downtrend is actually finished here. And if that's the case, prices will continue and break above that level, the 112.50 level that we talked before, and continue breaking above the 114.90, 115 level, which will invalidate the other scenario. The will invalidate every bearish scenario actually, and will suggest that prices are moving to much higher levels from here. However, it is very premature for now to say something like that, because as you can see, there are several technical levels that are pressing the euro to move lower from here. So although the momentum on the lower time frames is bullish, and there are some clear indications of short-term bullish reversal, it is preferred here to stay aside and monitor the developments of the price action, and probably enter short later, or consider a bullish trade after the break of those important support levels. I'm gonna show you now the actual charts that we have with the Elliott wave labels here. and here is the 4-hour charts, and this is what I was talking about before. Let's start with the daily chart. Again, the resolution is too low, and probably you are not seeing the labels very well, but the idea is that I'm gonna start with the weekly chart. Sorry, I'm gonna start with the weekly. On the weekly chart, we see how prices are forming an ABC correction. A move down for wave A, and then we have a triangle for some years here, and after that we have this downtrend that we're seeing for the last year or so. And as we can see on the daily chart, on the weekly chart, excuse me, prices have reacted here and have moved above the red SMA, and they are now testing the blue SMA, which provides dynamic resistance for now. After the last test here, they have moved below the red SMA, and now again the red SMA is providing resistance, but the price difference between the two SMA is very close now, and that's an indication that we are probably approaching a cross between those two SMAs, which will signal a long-term reversal in the euro. On the daily chart, we can see several scenarios here. We have a wave 1, 2, 3, 4, 5 for wave 1 here, wave 2, and 1, 2, 3, 4, 5 for wave 3 here, and then price is moving into an upsloping channel for wave 4, and we expect a fifth wave to move below that level here. Most analysts expect that prices will move to parity level. I don't believe that they will ever reach there. I believe that if any, the new low will be just a modest new low below the 1.045 level, and that's because of the internals of that last move here. We already have finished the largest wave of wave 5, the third wave, if this count is correct, and that wave finished around the 1.05 area. So the fifth wave to the downside cannot travel 500 or 600 pips to arrive to the parity level, or even go below that. It will be very large in comparison to wave 3. So the most probable scenario to the downside is that prices will move just below the 1.045 area, and then they will react and move to the upside. The other scenario is that, and I indicate that with the black labels, is that the whole move to the downside has already finished here. We have 1, 2, 3, 4, and an extended 5 to the downside, and then a wave 1 to the upside, which is a little odd, but there is nothing wrong with the Elliott wave count here. 1, 2, 3, 4, 5 to complete wave 1 to the upside, and then a complex correction of WXY for W here, X, and a Z wave that has finished here, which will suggest that the third wave that will drag prices to much higher levels has already started. In order to get a confirmation for this count, we need a break above this level here, because this will invalidate every single else bearish scenario, since this is wave 2 and wave 4 cannot enter the territory cannot go under or above the level of wave 2. I'm gonna go to the 4-hour chart to see better the internals, and here we have a 5-wave move to the downside from wave 4, what we believe that is wave 4, 1, 2, 3, 4, 5, and then a sideways move. And when you see sideways movements, be sure that those moves are corrections. And then we have a reaction to the downside, which can be counted in two ways. Sorry. The first way is 1, 2, 3, 4, and 5 in the form of an ending diagonal here, and thus we expect a wave 4 and the 5 in an impulse to the downside from here. And the other way is that this is 1, 2, 3, 4, 5 for wave A, this is wave B, and from here we have 1, 2, 3, and wave 3 does not end here, but here it is quite possible, and 4 and 5, which means that wave 3 goes into the form of ABC, which suggests that this wave 5 to the downside will take the form of an ending diagonal, and thus it is quite possible that this is wave A, this is wave B, and from here we have wave C up to that level, which is also the lower boundaries of that channel. Again, channels provide support and resistance, and this level coincides here, with an indication that this scenario is very probable. And from here, if prices find resistance here, they may react to the downside and continue into 3 waves to the downside for just a modest new low, and complete this this long downtrend for the euro, and then continue to the upside. I don't know what else to say. This is the way that I prefer to analyze the markets. This is what I'm looking to. Those are the indicators that I'm working with. I'm gonna now move on to the website to make a presentation of it and let you know how you can use it when you are trading, to get some new ideas, and probably supplement your analysis and make better decisions. First of all, before I begin, this is the home screen of the website. I have added a new feature on the website to help you keep up to date with updates. There is this bell here. When you can click it, now I'm subscribed, I'm gonna unsubscribe to show you how it happens. You click this bell here and you click subscribe, and this way you have subscribed to notifications. Every time, even if your browser is closed, even if you're not browsing my website, when I update a report, you will get an instant notification on the right side of your screen. This way there is no need for you to keep the web page open. You will get a notification and you can open it immediately. Okay, under the work section here, there are all the reports for the 11 financial instruments that we cover. We cover all the major currencies, DAX, S&P 500, gold, and oil. The reports are, we issue new reports every weekend for each of them, and during the week we update them based on the market developments. Every report has a fundamental section about which I'm gonna talk in a while, a macroeconomic calendar. Here we post updates with regard to the fundamental analysis during the week. There is a technical section when we give you the our views about technical analysis for the long term, mid term, and short term, and a summary. Here we start every report with 3 charts. We can click on them. This a weekly, a daily, and a 4-hour chart. And here we post updates with regard to technical analysis during the week. And here is the strategy section, which where we post signals with regards to the analysis for the best way to approach trading based on the reports. Keep in mind that those signals are just for educational purposes, and they're supposed to measure the effectiveness of the reports and not to provide you with specific trading signals. And here we have references with regards to the fundamentals above. There is a short video on how to use this report, and of course a legal notice that you should be aware from. Talking about fundamentals, during the week there are several fundamental events and releases from around the globe that affect the valuation of the different financial instruments. On each report we include a macroeconomic calendar with using the services of investing.com, of course, with the most important events that we expect to affect the specific instrument. We try to post a brief analysis for each event, showing our expectations for the event, but in general I like to use the fundamental analysis to identify the correct timing for trading and not to predict price action. What I mean is that fundamental analysis is good for analyzing long-term trends, let's say on a weekly chart, but for short-term trends there are cases where fundamental analysis deviate from price action, and a clear example is last week's NFP report. We had a higher than expected reading, which should be supportive for the US dollar and the stock market. However, prices, as you saw, didn't react that way. So we prefer to use the fundamental analysis to identify moments and times of increased volatility and place trades according to our technical analysis rather than predicting the price action from what fundamental reports show. A clear example was also the euro dollar during the, as I said before, during the ECB event. We had our technical analysis here showing that prices were testing that trend line from above, and exactly during the event, the bounce. I must say that that was an easy trade then. I believe that something similar will happen this week. Will happen this week with the British pound. I'm gonna move to the chart, to the platform again, and I'm gonna open the. Okay, this is the British pound chart. I'm gonna move to the daily chart. As you can see here, the pound has moved to new lows, and now the minimum requirements for a complete 5-wave move to the downside is met. Therefore, sooner or later we expect a bounce from here and probably a long-term bullish reversal. If we see it on the daily chart, on the weekly chart, excuse me, we can see how this is part of a multi-year ABC correction, and this was A, B and C, and around those levels here, between current levels and 144, prices should react to the upside, technically at least. The momentum indicator here on the weekly chart shows a very large divergence. Here we have made a new low on the price chart, while on the momentum indicator on the RSI, the oscillator remains above the 30 threshold. A continuation to the downside during the week and until the event of Bank of England, and probably prices to reach the 144 psychological level, together with the RSI reaching this 30 oversold threshold in the RSI, will be a technical signal that a rebound will occur. So when we have such an indication, and if we go to the 4-hour chart, we can see how this move, this 5-wave move for the this move for the 5th wave to the downside, it is not very visible this way. Okay, it is in the form of an ending diagonal, meaning that it consists of A, B, C waves. And as we can see, the last wave, the 5th wave here, this is wave A, this is wave B, and wave C has already reached the level of equality with wave A. So minimum requirements are in place for this pattern to be complete, and although it can continue to the downside for some time, because the momentum is still bearish, we expect sooner or later a rebound. When we expect a rebound based on technical analysis, and we expect also such an important fundamental event like an interest rate event, the probabilities are that the rebound will occur exactly during that event. So moving again to the website. Okay. And here we see here the fundamental events that will affect the valuation of the pound during the week, and of course the biggest day is Thursday. And following the speech of Chancellor George Osborne last Thursday, I believe it was, or Friday, Thursday I think, he implied in a way that Bank of England will have sooner or later to raise interest rates. And although most analysts expect that this will not happen until until June or probably end of the year, usually central banks don't ask before they increase rates. This is an unpredictable event, and we believe that actually the Bank of England will actually increase rates during this event unexpectedly, and that is due to several fundamental factors that drive into that direction, but basically that is because we cannot see how that technical chart can continue for another 3, 4, 6 months without a rebound, and such a rebound, such a trend reversal must be accompanied by a fundamental reason. It usually does. So this is the way in a way we try to predict fundamental events using technical analysis and not the other way. So again, I don't know what else I should talk about. I will continue a bit with the website, and I'm mostly finished. There is another section on the website, the blog section, and in this section you can find important announcements, of course, but most importantly our daily overviews, which we publish 4 times every day for each session: the New York, the London session, the Tokyo and the Sydney session. And we discuss the fundamental events and the state at which the instruments that may be affected from the events of that session appear. And of course we post the weekly summary every week after we have updated all of our reports, so you can find them in one place. And we have also created here a demo account where we trade all the alerts that we're issuing during the week to measure the effectiveness of the whole educational section of the websites. We started this report 2 weeks before the close of 2015. It was we had a lot of trades closing at a loss. This last week we had some positive results, and since the technique that we're using can be considered as a trend following technique, we need more time to make assumptions whether the analysis is good or bad, let's say it like that. There is also a section with special articles here, which for now consists of only one article. I highly recommend you to read this article. It covers a lot of things more than technical analysis and fundamentals that the trader should be aware of. And this is all I had to say in this first webinar. If you have any questions or anything that you'd like to discuss further, anything you'd like to show you, please use the chat to let me know now. I don't know if you like the webinar. It was nothing special. It was really my first webinar. I don't know how well I presented it. So there is either a very large delay on the video, or nobody just writing on the chat. Okay, since there are no questions or anything, I'm gonna stop the broadcast now. Thank you very much for watching, and we will probably have a webinar on more advanced topics in the future. Thank you very much.